So the whole tech world is terrified that AI is going to completely commoditize software engineering, but Figma just dropped a quarter proving that human design is the only thing we actually need to pay a premium for anymore. Welcome to Earnings Unscripted, where we try to find the real story hiding in the filings. Today we are unpacking Figma. It is their Q1 2026 report dropping today, May 14th, 2026. And wow, what a narrative shift.
Yeah, it is a massive shift. I mean, look, Wall Street was severely punishing the stock all quarter, down almost half, scraping the low 20s. Then they print $333.4 million in revenue. That is a 46% year-over-year growth rate, which is an acceleration from Q4. And suddenly, the stock spikes roughly 19% in extended hours.
Right, trading all the way up near 24.55.
Exactly, just a violent correction to the upside.
It really was. And before we get too deep into that violent correction, just a quick reminder that this is not financial advice. We are just two friends sharing personal opinions, so please do your own homework. But Miro, the profitability here, $52.1 million in operating income, 16% margin, bringing in 10 cents a share. The thing that genuinely shocked me was how they're actually making money on the AI side.
Right, because everybody else is struggling to monetize it. Other SaaS companies are terrified of churning their users with extra fees, but Figma intentionally flipped the switch on AI credit limits back in March. They effectively forced users to pay for overages.
Which usually ends in a disaster.
It does, but over 75% of their org and enterprise users just ignored the theoretical limit. They blew right past it and continued paying. It shows, that is massive inelasticity.
Wow. They essentially built a paywall, and 75% of their heavy users just threw their corporate cards at the screen to climb over it. That is not just product fit, that is indispensability.
It is. And the fundamental reason is that development is getting automated. The CEO laid this out perfectly. The bottleneck is no longer how fast you can code a feature. It's whether you can imagine a feature worth building in the first place.
Mm-hmm. Which makes Figma the actual command center for everything. Did you see the bit about Lufthansa? That was probably my favorite part of the call.
Oh, the flight app prototype.
Yes, their navigation team used the Figma Make AI tool to map out a commercial flight charting app. They hooked it up to internal APIs, and commercial pilots were literally swiping through simulated navigation maneuvers before a single line of production code was written. Like, if you're an airline testing life or death navigation software, you need absolute pixel perfection. Vibe coding does not cut it.
No, it really does not. And that's why enterprise adoption is accelerating. If you look at customers with over $100,000 in recurring revenue, 60% of them are using Figma Make weekly now, up from 50% last quarter. So the top line growth is obviously there, but, and this is a very big but, delivering that pixel perfect AI at scale is not cheap.
Exactly. There's always a catch when you look under the hood at the free cash flow. All right, let's get into the details and see what this is actually costing them.
You look at the free cash flow margin, and it landed at 27%, which is roughly $88 million. And at first glance, you think, okay, maybe the AI compute costs are really eating into the cash generation here.
Right, because querying all those large language models is notoriously expensive.
It is, but that is actually not the main drag. If you dig into the 8K, they took a 17 percentage point hit to that cash flow margin just because of a one-off corporate bonus. They instituted this new bonus structure back in 2025, and Q1 was the very first time they actually paid it out. So that is $56.1 million straight out the door.
Oh, wow. Yeah. A $56 million cash payout will certainly make a dent. So the core cash generation is actually a fortress compared to what that headline margin implies.
Exactly. And I was going to say, speaking of fortresses, I want to pivot to my favorite bizarre detail on this balance sheet. Do you remember the abandoned Adobe merger?
Of course. The $1 billion breakup fee. Hard to forget.
Right. So Figma pocketed that billion, and they parked a massive chunk of it in short-term U.S. Treasuries. That war chest generated over $62 million in interest income just this quarter alone. They effectively have zero debt and a completely subsidized balance sheet.
Wait, let me make sure I am framing this right. The interest from the money Adobe paid them to walk away is basically funding their operations.
Pretty much. And they're getting quite aggressive with those allocations. They actually hold 15.6 million in Bitcoin right now.
You're kidding. Figma bought crypto?
Yup.
It is tucked in the filings as an indefinite-lived intangible asset. It is incredibly rare to see a pure-play software business use treasury reserves for something like that. Usually you only see that with payment companies or, hardware founders with a very specific ideology.
That is wild. It definitely signals a very aggressive posture from management. But bringing it back to the core product, because they are clearly maintaining absolute dominance there, did they not introduce some major administrative friction recently?
They did. Up until March, they had a very loose upgrade policy. If a designer needed, say, a premium feature, they just clicked a button and the company got billed. But they changed it so IT administrators now have to approve all new software seats.
Which normally just crushes organic seat expansion. I mean, IT departments basically exist to say no to new software spending.
Exactly. You would expect a massive friction-induced slowdown. But their net dollar retention just hit a 2-year high of 139%. That is up 3 full percentage points quarter over quarter.
Meaning those enterprises are not denying the requisitions at all. IT is just rubber stamping the Figma upgrades because the teams literally cannot work without it.
And it is not just the designers driving that retention anymore. The CFO had this really telling stat on the call. He said, and I'm quoting here, "Among customers with more than 100,000 in ARR, those that were using our MCP grew full seats approximately 70% faster over the quarter than customers who were not."
Okay, MCP, Model Context Protocol, right?
Yeah, it's a server system that lets third-party AI coding agents like Cursor or GitHub Copilot securely read and write directly to Figma style tokens. Usage for that specific dev-heavy protocol spiked 5x quarter over quarter.
That makes perfect sense, because if an AI is writing your application code, the AI still needs a blueprint, and Figma is cementing itself as the mandatory blueprint layer. So where does this leave them heading into next quarter, considering all this momentum and maybe a couple of hidden risks?
Well, officially, management is basically radiating confidence. I mean, they just raised full-year revenue guidance by a massive $55 million. They are projecting roughly $1.42 billion for the year now. That is about 35% growth. But, and this is important, there is a short-term pinch coming. They specifically warned that Q2 operating margins and cash flow are going to take a hit because of config.
Right, their big annual design conference. So that is really just seasonal marketing spend, not some structural decay. But zoom out for me. If we look past the Q2 seasonality, what is the actual threat here? Because from the outside, it sounds like they're running the table.
The long-term threat is actually buried in the 10K risk factors. It is this concept of bring your own key, BYOK. Look, right now, Figma is making a killing upcharging for these AI credits. But if massive enterprise clients turn around and say, hey, we already have a master contract with Anthropic, we just want to plug our own API key into Figma. Suddenly, Figma loses that usage margin. They become just the interface.
Yeah, that makes absolute sense. It goes from a toll booth back to just being a canvas. But even if that happens, I keep going back to what the CEO said on the call. He had this really striking line. He said, in a world where bits are abundant, what is scarce is human creativity.
It's good marketing, I will give them that, but it's also mathematically true right now.
Yeah.
If the cost of generating code goes to basically zero, the premium shifts entirely to deciding what to build. Figma just needs to make sure the back-end compute costs to support that creativity do not spiral out of control.
Right. They just have to keep proving they are the most indispensable, highly profitable whiteboard in the history of the internet.
A whiteboard backed by a billion-dollar war chest and a stash of Bitcoin. Not a bad place to be.
Definitely not. I think we'll leave it right there. Thanks for nerding out with us today, everyone. See you after the next print.
Goodbye.
Just a quick note before we completely wrap up. If you want these episodes to naturally drop into your feed, go ahead and follow the podcast. As always, we like to be completely transparent that this is an AI-generated project, which is still pretty wild to me considering the engine figured out our conversational pacing today just by scanning a few text files. For any feedback or ticker requests, just shoot a note to earningsunscripted@datamadness.ca or hit the X link in the show notes. Talk to you soon.
Take care, everyone.